Hello and welcome to another edition of Pandemic Proofing Your Portfolio on the Wizards of Dalal Street. I'm Ramesh Damani. It is said that journalists write the first draft of history, but very few journalists can marry context with current events, like my guest has. Not only is he a partner at the Collaborative Fund, he's an author and he's written for every prestigious business journal. In fact, Shane Parrish once said admiringly of him that he's the leading light in the business press. It's a great honor today to host Morgan today. Morgan, welcome to our show.
Thank you very much for having me.
Morgan, in the last 6 months, investors have seen greed, fear, and both those extremes. But you've always maintained that investors are better served by being realistically optimistic. What do you mean by that?
What I mean by realistic optimism is this idea that being an optimist, which is the right mindset to have historically, people should be optimists about the future. That's the best bet. But being an optimist does not mean that you think everything is going to go well. Being an optimist does not mean that you don't think that the world is going to fall apart from time to time, or that we're not going to have recessions or pandemics. Being a realistic optimist means that we're going to have those things all the time. The world is going to be a constant chain of breakage and disappointment and decline and sometimes collapse. But those things do not preclude long-term growth over the very long run if we're thinking about the next 10 or 20 years. And that's really what history tells us about not just the United States, but the global economy, is that over a long period of time, over a single person's lifetime, progress tends to be not only present, but very large. But in any given moment during that period, there is constantly something to worry about, something in the news that looks bad, that looks terrible, that looks like something is going to preclude and derail long-term growth. So I think a realistic optimist is someone who says, look, we need to recognize that what we are going through this year in 2020 is the worst economic recession since the Great Depression, the worst pandemic globally since 1918. But I'm still an optimist about the long run. I can recognize how bad things are and acknowledge how bad things are and take empathy with the tens of millions, hundreds of millions, maybe even billions of people around the world that are dealing with the worst economic crisis of their lifetime. But I'm still a long-term optimist about the United States and the global economy. Those two things, it's hard to marry those two things, but I think it's important to have a barbell personality that lets you accept both of those things at the same time.
An example of that would be, as you mentioned, Germany post-World War II.
Yeah, so there's this interesting thing about Germany at the end of World War II, where in 1945, Germany's economy was completely obliterated. It had been bombed to rubble by the Allies at the end of the war. There was almost nothing left of the German economy. Its GDP had been pushed back to lower than it was in the 1870s. So just a complete wipeout of its economy. And it only took about 3 years for Germany's economy to rebuild and exceed its pre-war GDP. So to completely rebuild its economy only took about 3 years. No one thought that that was going to be the case. No one thought that it was only going to take 3 years for its economy to rebuild and get back to where it was before the war. But that's what it was. So there's actually a long history of economies all over the world. It was the same thing in Japan at the end of the war. It's been similar in cases like New Orleans after Hurricane Katrina in the United States, that you can have extreme devastation to an economy and still have, in a fairly reasonable amount of time, 3 to 5 years, rebuild that economy completely. Now, that's not to minimize the pain of what it's like during those 3 or 5 years for people who live there. I don't want to minimize any of that. It's incredibly difficult. But it's important for people right now to look at what's going on in the world and recognize how awful it is. Still have a sense of humility that we have no idea what's going to happen over the next year, over the next 5 years, but still maintain that over the next 10 or 20 years, that people still have a strong ability to solve problems, to innovate, to create new technologies. And that's what's going to matter over the next 10 or 20 years. And that's an important mindset for investors, because I think if you are a real investor, that's the kind of time set that you should be thinking about. Not what's going to happen to the market over the next year or even the next 5 years, but what kind of problems are people going to be able to solve over the next 10 or 20 years? And what does compounding do during that kind of time frame?
Morgan, great point. But as you well know about history, that history is written by winners, right? So you gave an example of Germany, which bottomed out in 2.5 years and made substantial new highs. But I could take you back to Japan. 1989, the Nikkei stood at 40,000. Even today, it's half that level. So the arc is not necessarily always bullish, is it?
It's not necessarily always bullish. Japan is an interesting example because you're right, of course, that the stock market has gone nowhere. It's lower today than it was 30 years ago. Japan is an interesting example, though, but because of the biggest reason that has been the case, that its economy, its stock market has stalled for 30 years, is because the growth in the stock market in the preceding 20 or 30 years before that was completely off the charts. So it's not necessarily that Japan has stagnated for 30 years, although that's the case, but in the larger context, it just drew forward about 50 years worth of returns and dumped them into a 20-year period from about the 1960s to the late 1980s. That could happen in the United States. That can happen anywhere too. The other big thing about Japan that is so important to understanding its story that does not necessarily apply to the United States or India right now is that Japan's demographics over the last 30 years are about as poor as they could get for a large nation's economy. Its working age population is declining every year. And there's really no economic history anywhere throughout all of human history of any economy growing while its population is declining. So if you look at a region like India or even the United States, it has growing working age populations. It's hard to compare what we are likely to go through over the next 30 years to what Japan has gone through over the last 30 years. Really interesting, though, in that point, though, what nations do have similar demographics today to what Japan has had over the last 30 years? China is one. Russia is another. There are Italy, most of Europe is that case too. So you can make the case over the next 30 years that a lot of nations around the world are going to have a very difficult period. That doesn't mean that it's going to be a bad place to live. Japan's been a lovely place to live for the last 30 years by and large. It doesn't mean your economy, your society is going to collapse. But should we expect lower economic growth, maybe lower market returns over the next 30 years in those regions than we have over the past 30 years? I think absolutely.
Maybe, Morgan, they will allow immigration in Japan, and so the population will start rising again. We can all hope that may happen. They clearly need the population. But bars aren't open anymore, whether it's in New York or Seattle where you are, or in Mumbai. But if bars were open, a favorite topic would be, what is the lasting impact of the CV-19 crisis? In your opinion, it's going to change behavior in a lot of ways. Can you point out two significant ways in which behavior will change in the post-CV-19 world?
Let me first just start by saying what I think will not change. I don't think if we are to fast forward, let's say 2 or 3 years, and I'm going to cross my finger and say we're all vaccinated by that period of time. It's no sure thing, but let's use that as a baseline assumption. I don't think there's going to be a dramatic change in consumer behavior. People are still going to get on airplanes. They're still going to go to bars. They're still going to pack into nightclubs and restaurants. That I don't think will change. I say that for 2 reasons. One, if you think about the closest historical analog to this, it's probably the 1918 flu pandemic. And if you go back to the period after the 19 flu pandemic, the early 1920s, I haven't been able to find any evidence that people were scared to go to restaurants, scared to go to bars. The 1920s were in the United States was the era of the jazz bar where people were packing tightly into these nightclubs and having a good time. That was just a couple of years after the 1918 flu pandemic.
In fact, it was called the Roaring Twenties. It was called
the Roaring 20s. That's what it led to, right? And even in the United States after September 11th, if you go back to the months right after 9/11, a lot of people said Americans are not going to fly again. They're going to be too scared to get on airplanes. They're not going to travel. They're not going to go on vacation. And that was true for about 6 months. And then we all got back on airplanes and it was everything. They were cautious. They were worried. We had enhanced security, but people got back on airplanes. So I don't believe that just because what we've gone through this year, that consumers are going to drastically change their behaviors. What I do think will change though, is that those consumers will probably have a higher propensity to save money. They'll want to save more money because they witnessed firsthand, they saw how devastating it can be to be caught off guard if 40 million people in the United States lose their jobs in 1 month and people don't have an adequate amount of savings, particularly small business owners. And I think people in the United States will have a higher degree of wanting a social safety net than they have before. We have this new scheme in the United States of enhanced unemployment benefits that are doubling or tripling the amount of unemployment benefits people previously got. I think once people get a taste of that, they're going to have a hard time letting it go. And I think that will just have a higher demand for social safety net than we did in the past. Those are 2 things that I think are almost certain to happen. Outside of those 2 things, I don't think there's going to be a tremendous change in consumer behavior once people feel safe to go back out. And they already are in the United States. It's almost certainly too early. We're having a second surge of coronavirus in the United States. You can't even call it a second surge because the first one never really ended. But people are already, just because of being cooped up in their homes for 2 or 3 months, saying, I want to go back out to restaurants. I want to get back on the road. Even a substantial number of people saying, I want to get back on an airplane right now. So I think it's hard to keep people pinned down for long, and you'll see them start getting back out for better or worse going forward.
Or attending political conventions in Tulsa, Oklahoma, though quite a few did not attend. But leave that aside. The savings will increase, hopefully. They increased after the global financial crisis. They'll probably increase again. But you also believe that this era will be marked by innovation globally.
It's always the case historically that the biggest innovations, the most important innovations, come during times when the world feels like it's broken, whether that's a world war or a major depression. That's always been the case. There are almost no examples of the biggest inventions, the biggest breakthroughs not taking place during periods when the world felt like it was falling apart. And the reason of that is because the biggest driver for innovation is not just the economic driver of, oh, if I create a product, I can make a lot of money. That's a huge portion of it, of course. But a bigger driver is we need to innovate today, because if we don't, we might die in the next year. So whether that is the amount of innovation that took place during World War II is just unprecedented, whether it was from jet airplanes or nuclear energy, nuclear bombs, and that led into peaceful uses of nuclear energy. There were so many things that came out of that. Penicillin, the widespread use of penicillin, it was discovered in 1929, but it wasn't until World War II that we had all of these sick soldiers that doctors said, hey, can we use this antibiotic to help people out? And then you had widespread use of antibiotics. There's so many examples of like this. The most productive decade in the United States, when we had the greatest productivity growth in the United States, was the 1930s. So you had all these innovators and all these entrepreneurs sitting around saying, we need to figure out a better way to do things, a more efficient way to run our business, not because we can earn more profits, but because if we don't, we're done. We're out of business. That kind of panic-induced innovation is what really drives technology over time. And we're seeing that in an incredible way in biosciences this year. It's not much of an exaggeration to say every pharmaceutical company in the world is trying to solve for one virus right now. And so many brilliant minds are just working double time, triple time to try to figure this out. If you look historically at like what that kind of behavior, that panic-induced innovation does to society, it's pretty optimistic. So we won't know what a lot of those innovations will do for us until for another 10 or even 20 years. That's another facet of technology history, is that it's a lot of the biggest innovations aren't obvious right away what they're going to do. But the amount of change that's going on right now is probably more than we've seen at any point in world history since World War II.
What do you think Wall Street is looking past Q2 earnings? You think those earnings, as bad as they will be, have been discounted by the market?
I think if we're to try to explain why the market has done so well since April, there's a lot of explanations for that. One of which is just it's crazy and this is all going to come unwound. Another is that, well, the Federal Reserve is pushing everything up. Those are valid explanations. I do think there is a sense, though, that maybe the market is thinking that 2020 is going to be just a complete washout for earnings. There's going to be effectively no earnings in the S&P 500. But that doesn't necessarily matter, especially with interest rates as low as they are. If you just think about a discounted cash flow model, taking out 1 year's of earnings doesn't make that much of a difference over time. So maybe that is what it's thinking about. But I'm usually not one to try to justify what the market is thinking or try to figure out what it's thinking, because the answer a lot of the time is who knows, and the answer a lot of the times is it's wrong. You go back to January. What was the market thinking about in January? Well, it wasn't thinking about coronavirus. None of us were even talking about it. So a big lesson from 2020 is how quickly the world can change. It can change quickly in bad ways, as we've seen this year. It can also change unexpectedly overnight, very quickly in good ways. This is not a forecast whatsoever, but what if we get a functional, mass-produced vaccine by October? Again, that's not a forecast. I'm not qualified to say that, but of course it could happen. People don't think that could happen. Most people don't think that could happen, but there is so much innovation going on right now that maybe it could. And if it did, what would that do to markets? What would that do to global economies? Would that create people who all of a sudden, a surge of people who want to go on vacation because they've been cooped up all year, a surge of people who want to go out to restaurants? Like, it could create, like, some of those problems could backfire, and you could get businesses that are just overwhelmed by the number of people who want to come rushing back. But it's important to realize that that kind of quick change can happen just as much on the upside as it can on the downside.
You talked, Morgan, about the world changing, and I want to take you a bit on that. Globalization, the rise of nationalism, all the rules that we made post World War II are changing. And do you think that's a net good for us or net bad for us?
I think it's hard for me to think of any example why that would be a net good for anyone. I think the changes that took place after World War II benefited virtually everyone. You can create and pick out segments of society in the United States that did not benefit as much as others, of course. But it's hard to make a rational argument for why that was a bad thing. And I think a lot of this is going to hinge on whether Donald Trump is reelected in November. If he's not, I think that will put us back on a track that we were for most of the post-World War II period. If he is reelected, and I think a lot of that you can probably kiss goodbye. And that's a big risk. That's not something that people should discount. This falls in the rational optimist mode. I'm still an optimist about the future, but if that were to be the case, I think you could realistically be less optimistic about the global economy over the next, let's call it 5 or 10 years than you otherwise would be. That's a real risk.
But I mean, we talk about it, and Trump is not an isolated example. The rise of nationalism, for example, is true in Turkey, it's true in Britain, it's true in perhaps in India too. So is that a risk globally that even if you find a vaccine, the world as we know it will have changed?
Yeah, I think that's always a risk, and it's a bigger risk right now than it's been in a long period of time. This is not the full explanation, but I think at least a partial explanation for the rise of nationalism is a growing segment of society for whom the last, let's call it 50 years of economic growth have not benefited them either at all or nearly as much as they have benefited other groups. So even if the trend of economic growth over the last 50 years on whole has been great, there's big segments of that society who have been left behind. And because now we are all connected because of the internet, because of social media, that segment of society can see how the other side of society has been living, how they're living. Think about something as petty and simple as Instagram. You suddenly now have basically anyone in the world can see how other people are living. And those people are only showcasing the best parts about how they live. Look at my fancy BMW. Look at my beautiful beachfront home. Now, those things used to be kind of hidden from the masses of society. Now they're everywhere. And that creates just a bigger sense of people saying, hey, you're living a much better life than I am. I'm working just as hard as you. I'm just as worthy as you are. So I'm upset about this now. I think that's at least a partial explanation for what has taken place over time. We had kind of seen that starting to go in the other direction before COVID, where the highest wage growth in the United States was taking place in the lowest share of income workers. It wasn't very much. It wasn't nearly to the extent that it was for higher income earners in previous years. But we were starting to see income growth among lower wage workers. That's obviously just kind of stopped and come to a halt with COVID-19. But we were starting to see a more balance of inequalities that had opened up in the last 50 years. I think that's usually the case in history, is that things that are too bad or too good won't go on forever. There's usually a reversion in the mean. We were starting to see that reversion in the mean. So maybe it is the case that if we get a vaccine later this year or early next year, that we still go back to that reversion of the mean that we had been seeing, where lower income workers start seeing some wage growth for the first time for some of those segments in 20 or 30 years.
Right. You mentioned in one of your articles, you raised the point of Instagram, that people are now renting private jets for 1 hour so that they can put it on Instagram that they're traveling by private jet. That's how much the disparity is between Instagram and the rest of the wannabes. But I want to build you back to, we don't know clearly the large trends that sweep across the world. But as an analyst who looks at stocks, what is the most important metric right now when you look at a company? What are the most important thing analysts look at?
I think there's two ways to look at this. At the company specific level, particularly for businesses that have been extremely hit by COVID-19, it's how long can you survive? How much cash is on your balance sheet? How long can you remain in business with virtually no revenue? That's the case, particularly for a lot of small businesses, small restaurants and right now that are shut down. It's just turned towards survival metrics that are most important. At the larger society level, what I'm looking at, if you look at like the broader economy, are just these kind of quirky metrics that show people's willingness to get back out and spend money. Things like the number of people who are traveling every day on airplanes in the United States. Things like restaurant reservations. There's some really good data from Apple where they track how far people are driving, how much people are driving, how much they're taking public transportation, how much they're walking throughout society. So just people's willingness to get back outside of their house. That could be a double-edged sword, because the more people that get back out, the larger the odds that we're going to have a second wave or just a continuing first wave of COVID-19. So it can go both ways. And of course, if we have a bigger surge, people might be more inclined to go back in their house and shelter down again. So it's hard to find the balance of this, but it's true that where things were in April, where people all over the world were effectively just locked in their homes and not leaving at all, and economic activity was down 50%. That's something that if you were to maintain that level for 3 or 6 months would be hard to recover from, because you would have such a large portion of businesses, particularly small businesses, that cannot survive that. If they were to maintain that for 3 or 6 months, they would just say, well, we're done. We're bankrupt. We're not coming back. And that's when this really gets out of control, is when the businesses start going out of business. And then even if you get a vaccine and people say, great, I want to go spend money again, you just have this structurally high unemployment because the businesses that you were hoping to rehire those people don't exist anymore.
Morgan, I'm a grandfather, new grandfather. You are a young father. I think your daughter celebrated her first birthday a few weeks ago, June 3rd, right, if I'm not mistaken. So that's congratulations on being a father. It's one of life's great experiences. You wrote a beautiful letter to your daughter. 9 points. The point that resonated with me is when you said there's a price for everything. And as true value investors, we understand that everything has a price. That was my favorite. Can you explain that briefly? And what was your favorite point that you wanted to make sure your daughter understood?
Well, first, thank you for that. And the big point about there's a price to everything is that most prices that we pay in the world, the most prices that we pay in life are not financial. There's no price tag on them. So we can't actually sum them up very quickly and say, how much does this cost? So think about investing. The price of investing, the cost of admission, what you have to pay to get investing returns is dealing with volatility. That's the price. That's the cost of admission. But there's no price tag on it. You can't say it costs $100. It's just this emotional price that you have to deal with. So most of the price in life, everything has a price. And most of the prices you can't summarize with a dollar sign on a price tag. They're just these emotional prices. The point that I think is most important to me in that letter that I wrote to her about just financial advice, some advice about how to think about money, is that it's easy to underestimate how much of people's success was due to luck and how much of people's poverty or lack of success was due to laziness. It's easy to not measure those things correctly. And it's so important to realize that not all success is due to hard work, and not all poverty is due to laziness. In fact, I think a majority of those things are due to factors outside of people's control. And being born in a family that has some level of money and pushes people towards their children towards education is going to set someone up in a much different light than someone who is born into poverty and does not have the opportunities to move on in life in ways that other people will. So just realizing that when you are summarizing people's success, or even your own place in the world, your success or your lack of success, realizing that that is not always driven by people's actions that they take. There's a level of luck and risk in life.
You know, Buffett said that famously. He said when he became $50 billion worth, he said, I guess I just won the genetic lottery. He was born in the right place at the right time. And he's very humble enough to recognize that. Morgan, you know, there's a Russian novelist called Anthony Chekhov. And he was talking to young aspiring writers. And he said, don't tell me that the moon is shining. Don't show me that the moon is shining. Show me the glint of light coming from broken glass pane. I think your writing has illuminated so many of us. Thank you so much. And thank you so much for sharing your thoughts on the Wizards of Dalal Street.
Thank you so much for having me. It's truly been a pleasure.
Great. We'll see you on another episode of the Wizards of Dalal Street. I'm Ramesh Damani saying goodbye.